I probably shouldn't be telling you this, but sometimes the numbers just don't make sense when it comes to borrowing money. So for example, I do a lot of funding with capital stacking. And one of the biggest complaints I get is that there is a 9.9% success fee paid on the back end after you receive the funding. So I thought today we'd do a fun little project and I'd break down the numbers for you and compare capital stacking with people's favorite type of funding, which is a traditional business term loan. So in all the examples, we are going to be taking out a loan of $150,000. And we're going to compare capital stacking to a 5-year and a 10-year term loan. We all know rates aren't beautiful right now. So on the 5-year term loan, we're just going to go with a pretty average interest rate of 9%. Your monthly payment is going to be roughly $3,113. And the total interest paid in that 5 years is roughly $36,825. And don't think that it's free to borrow the money. Every lender charges a success fee or origination fee. Typically on a term loan, you're looking at about a 5% success fee, which is roughly about $7,000. Now let's talk about a 10-year term loan and what those numbers might look like. While yes, your payment is definitely quite a bit lower. So instead, your payment is going to be roughly $1,900 a month. However, in those 10 years, you are going to be paying over $78,000 in interest. And again, that 5% success fee, which is about $7,000. And let's compare all of this to capital stacking. So again, borrowing $150,000, it comes at 0% interest for up to 2 years. And everyone always says, well, what happens when the 2 years ends? Doesn't mean close the accounts. You can put to use a balance transfer strategy that can extend that 0% for several more years. So we're at 0 paid on interest. If you stuck with just a minimum monthly payment, you'd be paying roughly $1,500 a month. And there is that 9.9% success fee, which in this case would equate to about $14,500. So let's put this all together. To get $150,000 with capital stacking is going to cost you roughly $14,000. To get a 5-year term loan is going to cost you roughly $44,000 between the success fee and the interest you're paying. And to get a 10-year term loan is going to cost you roughly $85,000 between the success fee and the interest you'll pay. Now, I'm no mathematician, but out of those three, which makes the most financial sense for any business owner? Be sure to comment below which one of those would make the most sense to you.